Hey, News Radio 600 Kogo. Welcome to your weekend. San Diego Business Weekend is on the air. I'm Sully. Great to have you along today. Big show coming up today. I've got Tom Del Beccaro, author of The Divided Era, that's going to have a chat with us about what's going on with politics and the intersection of business. And then, of course, got a company called Jackpot Digital that does business here in San Diego, revolutionizing casino gaming. You'll see some of their digital casino tables in some of the casinos around town in the Indian gaming space. So we'll talk to Jake Kalpakian and all that's coming up on San Diego Business Saturday on the air. All right, let's get started. Boy, I'll tell you, stocks somewhat found their mojo today. I should say today, this week, with respect to what has gone on the Dow, the NASDAQ, and S&P. Keep in mind, the S&P was trying to snap a 3-week slide because of the U.S.-China trade deal kicking off this week, and you saw sort of what happened there. We're still in a period of real volatility here. The Dow and the S&P fell for a third straight week last week, and that's the longest weekly losing streak since August. And of course, let's not forget, last week we also had Wall Street's really poor performance in the manufacturing sector, whereby that report, the ISM reports, sparked real fears of a recession. But then some of the biggest analysts say not so much. In fact, one analyst, which I thought was really interesting, and this is I talked about this on Good Morning San Diego this week with Ted and LaDonna, which you can find me every morning here on News Radio 600 Kogo. By the way, as long as we're talking about it, you can always find me at KUSI Good Morning San Diego, as well as The Big Biz Show. But what I thought was really interesting was the professor at Duke University who came up with the algorithm for the yield curve, okay? We've been intently focusing on this yield curve, but Campbell Harvey is a finance professor at Duke University, and 30 years ago, he came up with this relationship between the yield curve and the recessions. And he, by the way, is a really smart guy, but he also says we shouldn't worry too much about a potential recession, if only because it'll be a relatively slight downturn, according to him, but it's because we're expecting it. And if you think in terms of past recessions, we didn't expect past recessions. We basically, we saw suddenly the jobs market tank, businesses slashed jobs and investment, and this time around we actually might be planning ahead. Imagine that. So this is why all these recession fears are kind of getting muted. China, of course, in the meantime, has become a big part of the news, and they seem reluctant to sign a broad range trade deal, mainly because the one or two things that we really want to have happen is going to turn them into a laissez-faire economy, which they just won't do. It's a communist country. So anyway, at the end of the day, we are within striking distance of all-time highs with the S&P. Literally today, this weekend, 1.1% below all-time closing highs of 3,025.86 set on July 26th. Dow's off by a little more than 1.5%. Dow's record close was 27,359 set on July 15th. And the NASDAQ is still a ways away, and we're seeing a bit of a bombshell on the NASDAQ side. But I also want to talk about why last Wednesday, October 9th, was a day that lives in infamy among stock investors. Two major stock market trend changes have occurred on October 9th since the year 2000, all right? And if you are a Wall Street historian, I am not. If you are a superstitious person, I am not. But if you are both a Wall Street historian with a superstition bent, all of which held their breath last Wednesday, because October 9th is the day that not just one, but two changes in a major trend in the stock market have happened since 2000. The exact day of the top of the bull market happened. The exact day where the bull stopped being a bull happened on October 9th, 2007 and October 9th, 2002. That was the day the bear market became, if you recall in 2002, Thomas Penfield Jackson, the judge, filed a lawsuit against Microsoft, thus ending the dot-com bubble. That's exactly what happened. And October 9th was the day before it preceded the actual financial crisis. So it's a good illustration of how polarized opinions are these days with respect to some who think that Wednesday marked the beginning of a major new leg up in the market, and others marked that it was a major leg down in the market. So this is why it's good to look at the three basic legs of the milking stool when you're talking about investing. And what I mean by that is you look at fundamentals like we all do. We want to look at earnings per share, who's in the lunchroom, so on and so forth. However, we also want to talk about the news on the street, what's happening there, and then you look at technical analysis. In fact, guys, can we pull up a chart of the Dow Jones? And I want to illustrate this for you radio listeners, but also after the program today, I want you to go to kogo.com, keyword Sully, and I want you to click on the San Diego Business Saturday television version, because we produce this show out of Jump Television Studios in San Diego. So there is a TV version of this, and oftentimes when you are listening to this program, you can also watch along on TV right after the show airs this afternoon. So when I talk about technical analysis, what I talk about is a short-term moving average and a long-term moving average. Typically, I will take a 13-day moving average and a 50-day moving average. In other words, 2.5 weeks of trading would be a short-term moving average. 50 days of trading, in other words, 10 weeks of trading would be a long-term moving average. You can make a long-term moving average or a short-term moving average any distance you want. You could have a 100-day and a 300-day. The lower number, of course, is the short-term moving average. The bigger number is the long-term moving average. So if you think in terms of all this, however, when you see moving averages converge or diverge, they tell different stories in the market. In other words, when you see a short-term moving average cross above a long-term moving average, it typically will show that markets are trending up. And there's a saying in Wall Street saying the trend is your friend. When you see a short-term moving average trending below a long-term moving average, as happened in August of this year, as happened in May of this year, as happened a number of times last year, including in November. What tends to happen when the short-term moving average crosses below the long-term moving average, and the way moving averages are calculated is just how stocks trade. Okay, so like for the Dow, for example, trading at 26,300 midweek this week was very, very close to having its short-term moving average cross below the long-term moving average, because the long-term moving average in the middle of the week was 26,393. And the short-term moving average at the same time was 26,500. So within 100 points of crossing below, and what typically will trigger is a technical move. And a technical move is based on nothing more than emotion, because the markets run on fear and greed, and this is how it works. If you were to buy a stock at $100, and just one share, I don't care what it is. Let's say you bought $10,000 worth of stock and it was $100 a share. If your $10,000, I beg your pardon, let's say even better. If your $10,000 investment dropped down to $8,000 and you didn't sell it at that point, and it started creeping back up towards the $10,000 again, what do you think most people would do by the time it hit 10,000 again? Think about this. You invested $10,000, it dropped down to 8,000, you didn't sell, and now it's creeping back up to 10,000. Most people would sell because they felt like they dodged a bullet. That's how technical analysis works. So bring that chart up again, guys, and you can see sort of what's happening with the Dow Jones is that you form a resistance and support line where you see how many people got into a given stock on a given date. So if you take and look at the Dow Jones, go all the way back to November of 2018, there's a support line that you can draw that happened in November, it happened in December, it happened in March, it happened in May, it happened again in July and August, and it's happening now. You can almost draw a straight line across, and you can see the resistance support level. We are basically where we were last October. We've gone sideways for a year, and what's worse, we went sideways the year before because it was election year. So the economy is doing good. The market's going sideways, and I think that's really important to understand because, let's face it, we are only 52% of us are invested, actually less than that, 42% of us are invested in the stock market. and 100% of us are part of the economy. So that's the piece that goes on here that we need to talk about. So again, according to the bull bear market calendar, this week marked either the beginning of a really big bull continuation, or it marked the end of an era. And there's something to be said for both, because there's polarized opinion. And if you want to appreciate, just one last thing, if you want to appreciate how polarized market views are right now, you can bear in mind, no pun intended, that the stock market is within shouting distance again of all-time highs. Think about that. We are within a hair's breadth of all-time highs on the Nas, the Dow, and the S&P. And nevertheless, from reading opinion and such going forth, you'd think we'd already started a bear market, right? I mean, with all the opinion that's out there, you would think that we have already begun dropping like a dollar on dollar beer night. You'd think that we have already started sinking like an NFL team in San Diego. So long story short, things are not as bad as you anticipate. And even better, I'm going to bring in Tom Del Beccaro, who wrote the book, The Divided Era, and of course, politicalvanguard.com. We're not going to do a politics type deal today, but what we are going to do is have him break down the noise that's going on in Washington as it relates to what's happening on Wall Street. All right, San Diego Business Weekend. We're off. Tom Del Beccaro is coming up next. Also, I've got Jake Kalpakian with a company called Jackpot Digital. They've got a new casino board game that is in many of the Indian gaming casinos in San Diego, so I'm going to talk to another captain of industry today. In the meantime, you're listening to San Diego Business Weekend. I'm Sully. News Radio 600 Kogo. News Radio 600 Kogo. San Diego Business Weekend. I'm Sully. Welcome to your weekend. With so much that is going on in the market, I had to bring in my ringer, Tom Del Beccaro, who, of course, wrote the book, The Divided Era, and politicalvanguard.com. Well, that's his website, politicalvanguard.com. But Tom is an author. He is a talk show host. He's a historian. He's an attorney. He's an analyst. He is a speaker of some note. And, of course, he contributes to foxbusiness.com, foxnews.com, and others as a columnist. And he joins us today here. So we've got to get to the volatility of what's going on in Washington. And, Tom, the market's ignoring it. It's so interesting how the market is completely ignoring the fact that we have, I mean, stocks have notched consecutive gains over last week as Donald Trump decides to meet with China, as he's in the throes of an impeachment inquiry, and so on and so forth. So, I mean, the market's ignoring this nonsense out of Washington. Shouldn't the rest of us, perhaps?
I don't know if we should be as cynical as the markets. Maybe the markets are looking at this and discounting it, thinking that the impeachment inquiry won't come to pass any more than the Mueller inquiry did, and they're more interested in nuts and bolts of what makes a good market and a bad market. I think overall, the U.S. remains the best place. You know, if you're sitting in the sky wondering where to put your investment dollar or whatever currency, I think the United States is the best place in the world because Trump's created so much uncertainty with China, and you see the European markets are drifting lower because of the poor economic performance in those countries. So I think that our markets are rejecting the fear of impeachment, focusing on the ups and downs of the China-U.S. tariff negotiations, and overall thinking, well, where else are we going to put a dollar?
Well, yeah, and I think what's interesting is China cannot withstand for long a trade war with the U.S., and I think hopefully investors understand that, and I think Washington certainly does, because look, at imports were down in August by 16% of Chinese goods, down by 18% last month. China can't stand a hit like that forever. I mean, what's happening is that U.S. importers are going to other countries, specifically like Vietnam. And when they do business with Vietnam, there's a laissez-faire type of government. It's cheaper labor. They don't have they have some corruption, but I don't think the corruption it pales in comparison to China. What's your opinion on that?
Well, I look at it a slightly different way. I certainly agree with you. I think sometimes it's just so easy to do what you were doing week to week, month to month, year to year, until something pushes you. And I think Trump has pushed the American manufacturers or importers to think about where they're buying their goods or where they have their factories. Because if China is going to be front and center of constant trade wars, that's headaches they don't need. And so they've been forced to relook at their assumptions and say, okay, if our assumptions need to change, we can save money elsewhere, like Apple when it brought home the MacBook Pro to Texas, manufacturing there. I think that's what's going on. I'm not sure I completely agree with you that how long China can hang on with this sort of thing, because I do think China believes that it can wait out this presidency and but may make a mini deal just to ease things a little bit. In fact, I've read a lot. I concentrate on the political. I've read a lot about speculation that Trump will make some sort of mini deal just to get past the election, and maybe he won't look so good, but the markets let's say he makes the deal next September and the markets jump. Maybe he gets a play off of that.
Well, but so this is, and you brought up such a great topic. By the way, Tom Del Beccaro is our guest this weekend, and he wrote the book, The Divided Era. He is one of the smartest political analysts, but also an economic political analyst, where the intersection of business and politics meet. In fact, I've always thought you should do a show in that area. But Tom, this is what's interesting, is that people equate the economy, the stock market, as the economy. And that's just not the case. Only 48% of us, at best, participate in the stock market. 100% of us participate in the economy. And they're not the same thing. I mean, look, they're attached at the hip. One is a leading indicator of the other. I will tell you that the stock market is a leading indicator of what goes on in the economy. But let's face it, though, under President Obama and under most Democratic presidents, markets go up, economies go down or sideways. In this case, you saw a stock market that has had, and Jared, if you could, pull up the chart that I put in, and I know our radio audience can't see this, but after the show, if you go to kogo.com, keyword Sully, you can watch the TV version of this. But if you look back in 2009, during the financial collapse, when the Dow Jones was under 8,000, and we went all the way towards where we are now, and the long story short is, we've had an unfettered gain in this stock market, with the exception of a couple of sideways years, most notably 2018, and I think this year has ended up being sideways as well. But do you think a stock market rally is going to be perception enough that the economy didn't suffer from the trade war coming in 2020 in Donald Trump's favor? Because let's face it, you have a middle class here, then I get in these arguments all the time. If the economy's so good, why aren't I feeling it? And the reason they're not feeling it, Tom, is because of wage stagnation. The middle class is still getting paid the same as they were under Obama. So is that going to be enough, in your opinion, to get him going?
Well, I think the wage growth has been, better than double under Obama. I mean, it goes 3%, whereas Obama was stagnant. They're beginning to feel it. You of course, have always said that the wages take 2 years to really come into play versus the market, which may move faster, or manufacturing orders may move faster. So, and you're right that the economy isn't equal to the market, but a friend of mine named Sully also told me once to remember that those in the market have a higher rate of voting than those outside the market. Yes, they do. So I do think I'm not saying that the fact that the market will do well will ensure his reelection, but it's a lot better than the alternative. And I think even though where the manufacturing has gone somewhat soft, there's other elements of the economy that continue to do well, and Trump will need the economy to do well next year for sure, and the market can assist him in that. I do expect a flurry of activity from the administration to make sure the economy sustains itself next year, and also showing the contrast between what he would want to do and what, say, if Elizabeth Warren is in the lead or the nominee, compared to what she would do. And of course, she has scared Wall Street. You have a lot of people saying that big Democrat donors on Wall Street want nothing to do with her, and either will sit it out or give to Trump because of her policies. If that kind of thing comes to pass, I think Trump will want to contrast himself and say, I'm going to give further tax reform, she's going to raise taxes. I'm going to do further regulatory reform, she's not. And so I do think he's going to make that play next year for sure.
So my question would be this, and you teed this up perfectly. Do you think the market will? First of all, I think the market will react based upon who Donald Trump faces in the election. I think the market will react and will give us sort of a precursor, sort of crystal ball, the way it reacts as you see, let's say, Elizabeth Warren versus even Biden or even Bernie Sanders or whoever else could possibly. If Hillary Clinton comes out of the mothballs, wouldn't it be interesting to use the stock market as a leading indicator? Because I think we're going to have a stock market reaction one way or the other, and I think that's going to shake a couple of voters if it goes in the wrong direction. If there's a perception that Donald Trump's in trouble and the market starts tanking, I think that's going to wake some voters up, don't you think?
Yeah, it's a market. Let's say next year there was a significant gap between the Democrat nominee on top and Trump trailing. I think you could say at that point the market is a leading indicator. I, of course, and I have a piece coming out on Fox Business sometime soon about how markets go sideways in election years. I think if it's going sideways, maybe the leading indicator there is that they don't know what's going to happen. But if it's drifting up, that would probably follow with Trump being in the lead with respect to the polls, as opposed to the Democrat.
It's so interesting that you use the word drifting. Ted Garcia and I were talking a few mornings ago here on San Diego Morning News about the word drifting, and it sounds a lot easier than crashing or tanking. But you're talking about drifting up, and I think that's a sentiment that you could actually count on in the market at some point, right?
If Trump shows to be in the lead, look, it's hard to have a crystal ball. I don't think personally the Democrats will succeed with this impeachment stuff. I think there's going to be some egg on their face, especially with FISA and the IG report and a couple other things. And I think they've gone too far left. I can tell you, not to give out stock advice, but I'm not personally saying I'm not pulling my money out of the market. I'm being strategic as opposed to just a flat buy.
Well, and I think so too. I think with what's going on in the market right now, you have to pay attention to the three legs of the milking stool, the three triumvirates of the milking stool, which I'll explain to you in just a second. Tom, stay right there. There's a milking stool of investing. Did you know that? I'm going to tell you what it is. It's News Radio 600 KOGO. Tom Del Beccaro, author of The Divided Era. We're going to talk about affordable housing a little bit. News Radio 600 KOGO. News Radio 600 KOGO. San Diego Business Weekend. I'm Sully. Welcome to your weekend. Coming up in just a few minutes, Jake Kalpakian from Jackpot Digital going to be talking about the business of gaming, especially with all of our Indian gaming casinos here in San Diego. It's going to be an interesting play. Who of you can tell me who this artist is, what year it came out? Email me. Go to kogo.com, keyword Sully. Send me an email, or go to bigbizshow.com. You can email me there. Tom Del Beccaro, the author of The Divided Era. He is a political analyst. He is a columnist. He's a television host, and he joins us here frequently. Not only here, but on the Big Biz Show with Rusty Nails and I, which you can watch every night, nationwide, coast to coast on national television. You can also hear it in about 150 radio stations every day, and we're also an Armed Forces radio network in 175 countries and all the ships at sea. You also catch me over at KUSI on Good Morning San Diego, and I've got an announcement about KUSI coming up. It'll be pretty cool with my good friend little Tommy over there. In the meantime, Tom, I want to talk about something which is a local story in San Diego, but I know that you live in the Bay Area. And first of all, I'm glad to hear that you're safe, but there's a reason why Tom isn't on Skype today. And again, you can watch the version of San Diego Business Weekend by going to kogo.com, keyword Sully, after the show's over, and you can normally watch Tom from his office or his lair, as I put it, because he does look like Bruce Wayne. But today you're on the phone. Why is that, Tom? Why are you not in front of Skype?
Well, and I have an op-ed on this as well from Fox. The crazy shutdown related to energy in this state, which is, a quintessential, I was going to say unique, but quintessential California shutdown. You have these energy producers who are under these clean energy mandates required to buy expensive energy, which prevents them from upgrading our grid in some respects. And they're flexing their muscle, shutting down power, even though it's not really necessary, and frustrating ratepayers in the hopes that they will clobber their legislators. But in this one-part state, which doesn't know how to deal with energy or housing, it just produces frustration.
So let's talk about that, because PG&E in an attempt to mitigate high winds, fires. Was there any winds at all, by the way?
When they shut down the power where I live, there was no wind at all. And I'm just not making this up. No trees were moving. And they shut down huge areas. They forecasted that it would. And so they set this up. They threatened everybody saying this is coming. And then they refused to change when the weather changed. And as a result, we went through this process and, shut down. You had cities requiring curfews because of looting. You had businesses lose real money. They don't care. They're a monopoly. It doesn't come out of their pockets. They're guaranteed a rate of return.
So here's my question, because look, and I don't want to get the political side, so we can get into the nanny state thing, and we can talk about that all day long. But what I really would like to talk about, in respect to this specifically, is the fact that you live in the Bay Area, which is highly regarded as one of the most expensive areas in the country, if not the world, to live in.
Correct.
And of course, here in San Diego, California, and of course, Los Angeles, Santa Barbara, where you can hear me, all the way out to Yuma. There's always this talk on affordable housing, and it's an economic question, but it's also a political question. And here's the stark reality, because here in San Diego's Economic Development Department has issued a request for proposals to build housing on city-owned lots in an area here in town called Southcrest. And the city of San Diego and Civic San Diego are now doing an RFP, a request for proposal, to build cheaper housing that's going to be available for purchase. Now, folks, especially developers have said for a long time that because of all of our regulations, it's nearly impossible to build anything under roughly $500,000. Now, do you know what they mean by regulations? Of course, they mean environmental regulations. They mean CEQA. By the way, the minimum requirement for the city under law is to build 3 homes, so it's not exactly a huge bar they've got to reach, but no bids have been submitted yet for this request for purchase. And it sort of makes you think, Tom, and I want you to talk to me about this, that you can't beat the drum for really tough environmental regulations and expect cheap housing at the same time.
No, it makes no sense at all.
Which is the problem, right?
The house that costs in California $800,000 to build costs $300,000 to build in Texas. And where I live, all these towns are required to have a certain level of affordable housing. But what's the definition of affordable? It's at $700,000 to $800,000. And, before builder-ready lots, meaning there's a lot. It's got curbs. It's got electricity to the, ready to turn on someday. And those lots are $300,000 to $400,000 apiece before they buy a nail or cement or a backhoe to, on the property. And, this isn't accidental. Look, they build houses in Vietnam for nothing. I'm not asking us to be at that level, but, it isn't inevitable that costs are this much. This is a policy choice, and you're right. On the one hand, you can't mandate all these regulations, and on the other hand, be shocked that the cost of doing business in this state is so high, and affordable housing really isn't. And you are, I know you don't garner yourself as an economist, but you really think like one. And I know you're more of a historian than anything. And of course, you're an attorney. So here's the stark reality in my mind. Don't hold that loud.
No, I know. I've got plenty of jokes for you. Look, you can't just force your way through supply and demand inertia, especially when you have onerous environmental regulations. We don't need more affordable housing. We need more housing so it will be affordable.
Yes.
Right? I mean, again, let me repeat that. We don't need more affordable housing. We need more housing so it'll be affordable. If we believe that cities provide economic opportunity, if we believe that cities produce fewer carbon emissions per capita than urban sprawl, if we believe that cities are more energy efficient, if we believe that they have less impact on oceans and lakes and rivers and streams, and that cities afford people a wide variety of ethnic and economic and cultural backgrounds and all the kumbaya to live close to each other and learn from one another, then we should believe that more people ought to be living in cities. And that means we believe in creating more housing, because if the number of housing units meets or exceed the number of people that want the housing, you'll never have affordable housing. So you make it easy. You have to make it easy to build, Tom. You got to flood the market. You got to flood the market.
Of course, this is government, and they don't think that way. They think, okay, these are the houses that we'll allow. They're not affordable, so therefore we'll subsidize something, not realizing that they're subsidizing is causing prices to rise, just like the way we subsidize education in this country, and therefore when you increase demand, you can raise prices.
Sure.
Because if the supply isn't commensurate with the increase in demand.
Yes.
And so they're just causing even more problems. But it's not just within San Francisco or LA or San Diego. Out where I live, the ability to get a home and still drive an hour and a half to get to work is difficult as well. And look, people are coming to this state. But what do you either allow them more housing or you don't. And they have choked the supply for so long that getting back on the other side of the curve is enormously difficult.
Well, and I would agree with you. I mean, I think a piece of this, comes down to the fact that, look, in a utopia, all right, in a utopia, I don't want to see a couple things. I don't want to see people making minimum wage and living in poverty, all right? I don't want to see people not be able to afford to live in the places in which they work, thus causing their quality of life to go down because they got to drive 2 hours in each direction. But at the same time, you can't put the onus, on small business, which is the biggest taxpayer in this country, the biggest employer in this country, and the least incentivized. But you also can't just by the stroke of a pen make somebody worth more. So the government sort of needs to stay out of it. I think this is a perfect lesson in free market economics. And you can solve the housing issue by letting the free market economy rule and pull regulations out. Again, flood the market with housing, not with regulations. Because, again, if the number of housing units exceeds the number of people that want that housing, you never have affordable housing. And that's the problem.
Yeah, and not necessarily, that doesn't mean when you say that, okay, we're going to have no regulations whatsoever.
That's exactly right.
And be Houston overnight.
You're right.
But there has to be a better balance, and there is no balance in California at this point. I look, as a historian, I'll tell you, I am entirely unconvinced that the best thing for the human condition is large cities. Large cities are filled with disease, they're filled with crime, bad education, and political corruption, and people whose nerves are fried. I think we should make a greater effort to be suburban or less, and stop forcing people to live on top of freeways where there's noise and no sleep.
I agree. And that's why Tom Del Beccaro is for president of the United States. I've never asked him if he wanted to run for office. All right. Let's take a real quick one. Tom Del Beccaro is our guest. The Divided Era is the name of his book. And, of course, politicalvanguard.com. Coming up in just a second, Jake Kalpakian with Jackpot Digital. You ever wonder about the business of gaming? He's going to tell you about it and break it all down. Also talk a little bit about market issues that are coming up. I'm Sully. It's San Diego Business Weekend. Welcome to your weekend. News Radio 600 Kogo.
You are enjoying Russ and Sully on the Big Big.
News Radio 600 Kogo, Sully here. Welcome to your weekend. It's San Diego Business Weekend. Thanks again to Tom Del Beccaro from the Divided Era and politicalvanguard.com for joining us today and breaking it all down. So, you can catch me every morning on the San Diego Morning News here on News Radio 600 Kogo with Ted and LaDonna. Also on Good Morning San Diego over at KUSI Television. And then, of course, Russ and Sully on The Big Biz Show. Yeah, Russ T. Nails and myself do a national television, national radio broadcast every night. 110 million TV homes, 150 radio stations, in 175 countries. BigBizShow.com, the multi-Emmy Award nominated and winning Russ T. Nails with us. So many of you know that I beat the drum for economic impact here in Southern California, whether you're listening to me all the way up in Santa Barbara or LA or city of San Diego. It's all about economic impact. And one of the biggest economic drivers in our region has been the casino industry, specifically Indian gaming with respect to market size in our region is pretty significant. In fact, if you look at the Indian gaming market size across the country, you're talking with respect, I mean, here in San Diego, it's $1 billion or close to $1 billion by 2021. Across the country, it's much larger than that. But in so doing, in looking at the Indian gaming side of things, I started, checking out how, cool these places are. And you've looked at everything from Sequan to Viejas to any number of Indian gaming casinos. But I came across a publicly traded company nationally, actually based out of Canada that does business in the U.S. called Jackpot Digital. And I met a guy named Jake Kalpakian. He is a passionate poker player with more than 28 years managing publicly traded companies. And he is the president and CEO of Jackpot Digital. And I wanted to talk to him because they've created something really cool that I've never brought to this audience before. He's been a guest on the Big Biz Show before, and I think you're going to see a lot of him. But it allows you to play poker, among other games, on a digital board or digital poker table with no dealer. Jake, take over from there. Great to have you along, pal. How you doing?
Good to be here. Thanks, Sully. I'm doing well.
So listen, the Southern California audience has not met you before, so I want to give you a chance to kind of explain what this thing is, because if you go to jackpotdigital.com, you can see it. But this is a really cool thing you guys invented.
Yeah, absolutely. It's quite revolutionary, and we've had a great interest and feedback so far, and I think we're on the cusp of some really changing the bricks and mortar poker business.
So what is it exactly? Talk about what it is exactly.
It's a dealerless poker table. It's a digital table. In essence, it looks and feels like a regular poker table. It's 9 or 10 seats. There is no dealer, though. It will automatically or automated dealer. You get your cards. You get the social interaction of playing with other players or against other players. You get all the bells and whistles and then some. There's many other features that you would normally not get with a live dealer. With us, you'll have the ability to bet the flop. You'll have many other options to play blackjack or baccarat while you're sitting out a hand. But the true essence of it is it's a regular poker table. It's a digital poker table, but the cards and the chips feel like they're real. And the most importantly, you get all the social interaction and enjoyment with playing against other people. And at the same time, you're getting double the action because you get more hands in. And for the operators, it makes a lot of economic sense because not only are there more hands dealt, which means more rake, but the costs are drastically lower because you don't have to pay a dealer and the many other related costs.
So let me ask you something, Jake, because and let me try to describe this, because typically in a poker transaction or a poker table, you've got a dealer. Let's say you've got 8 players sitting at the table, and he deals he or she deals the hand. Each player has to play out their hand before they can play the next hand. One of the things that you're talking about is the fact that you are able to, once your hand is over, you can continue playing and other guys are playing too. Now, talk about the fact that you can, it's got a touch and feel to it as if you're able to flip up your cards and look at it with nobody else seeing it. And this is all automated. Talk about that part of it a little bit.
Absolutely. What we wanted to do was make sure we won the hearts and minds of poker players. A lot of people hear digital poker tables and they become skeptical. But what we wanted to do was recreate the experience they have at a live dealer with a live dealer table. We're able to do that not only with the table by having more features, which makes people more stimulated or engaged with the product, but just the pure ABCs of playing poker. We wanted them to feel like they're just playing at a regular game and they're not missing out on anything. When the cards are dealt, they're dealt exactly the way they would be with a live dealer. You could bend the cards like you would with the regular live or paper cards. The chips make the same sounds that you would see in a casino. You're really getting the same feel and experience that you would be playing on a live table, just without a dealer.
So at the same time, and when you say flip the card, you can actually it's like a virtual peeling of you tap the thing and it looks like, and the cards come up.
Yes.
You keep your hand in front so nobody can see it.
Bend the cards. You can bend the cards. You could show one card, for instance. Let's say you won the hand and there's a little bit of trash talking going on in a good way. You want to show one card. It was a bluff. You could just show one card if you want. There's many different things. It's as if you're playing with real cards at a real table. There's nothing much different about it. Although it is digital, the experience is the same, but there is no dealer, which means the games go a lot faster. The shuffling doesn't have to take place. It's all random number generated shuffling right away. So you get the speed and benefits as if you're playing online, although it is not online. I want to make that very clear. But you get the speed and benefits, but still get the social interaction and enjoyment of playing socially.
And and by the way, for our radio audience, if you want to watch what's going on here, it's easy. You can go to jackpotdigital.com, but you can also go to kogo.com, keyword Sully, after the show today, and main producer Lady Mary will have posted the television version of this where we actually have the video of it up there. I just saw somebody have a choice after they got done playing their poker hand. I just saw the guy hit a tab that says games, and he hit a thing that says baccarat. So suddenly he wasn't playing poker anymore. He was playing something else. Talk about there's more than one game on there, correct?
Well, Sully, absolutely. If you go to a regular live card room, you'll see many players, they only play a few hands an hour. Just that's the nature of the game. And so they're disenfranchised, if you will, and they're bored. And they usually get on their iPad and start playing online. What we wanted to do was keep the players engaged and stimulated at the poker table itself. And that's what the operator wants. He doesn't want them playing online and giving their dollars elsewhere. So now, if they're not involved in a hand, they can just tap on a button and play many different other options. They can play blackjack, they can play baccarat. But more than that, there's also other opportunities for them to get involved with. For instance, the Bet the Flop has been a big success so far. We've just introduced it where players, although they're playing against each other in the regular poker hand, on Bet the Flop, everyone has the same interest to see what happens on those first 3 cards. Much like Caribbean Stud Poker or many other optional games, you can bet a side bet and see what happens in the middle of the action, and everyone has aligned interests there.
Hey, Jake, let me ask you something about the business side of this. By the way, Jake Kalpakian is his name. He is the president and CEO of Jackpot Digital. They are publicly traded, by the way, on here in the States and in Canada, and they've basically created a digital poker table that's interactive that also has a number of other casino games on it. I have to ask you.
Let me say this. Let me say this about our table, since you brought it up again. If you believed in slot machines, 3-4 decades ago and saw the success and proliferation of slots in the gaming industry, this is going to do the same for the bricks and mortar poker industry. You're going to see absolute adoption of this product. We're seeing more and more interest. Initially, people don't know because they haven't seen a digital poker table. This is the first of its kind, really. And because it looks like a giant iPad, people are really warming up to it. You're going to see this revolutionize the bricks and mortar business. And if you thought slots changed the way gaming did, this is going to change poker at the bricks and mortar level.
Well, let's talk about the changing poker, because the changing landscape of the casino industry, and I've learned this from you in interviewing you on the Big Biz show. Casinos are looking for new entertainment options, and they're looking to bring in new players. And the current focus has got to be, I've said this a number of times on this program as well as Big Biz show, as well as on KUSI, is the fact that in 7 short years, 75% of our customers and 75% of our employees will be millennials. So I have to believe the current focus for casino gaming is on millennials with new gaming options and such. And of course, that's going to mean digital and interactive. Talk about that piece of it a little bit.
Well, when we're in negotiations or discussions with casinos and card room operations, that's exactly what they say. They want to bring in more of a millennial crowd or cater to that demographic. Our table does that, and although we focus and we have what I call a Goldilocks business by being a poker-focused business, although we have the other games as you've mentioned, we wanted to first and foremost give everyone a great poker experience, and we're able to do that with our product. But the applications with our digital technology are endless. So it cannot just end with poker and other traditional casino games as we know, but we believe this table will revolutionize many other entertainment options in the casinos, but not necessarily the card games that we're all used to. I mean, you could see board games like Monopoly on this table. You could see many different type of entertainment options that will cater to millennials. And the fact is, a lot of the millennials are playing online. They're used to the digital aspect of things. And more than anything else, the need for speed and choice to keep them engaged and stimulated at the table. A regular live dealer, while traditionally, we're all good with that, it doesn't do enough as far as the speed is concerned to keep the players engaged at the table. And we're seeing more and more people wanting that option, and our table does that, but it does bring the players into the door and at the casino and earn the money. And of course, there's all sorts of auxiliary benefits to that.
Jake, I got to tell you, I would love to have you back, and obviously there's this is something you can talk about, especially with the economic impact that goes on in our mega region with respect to gaming, and I want to bring you back on this. But once again, the name is Jake Kalpakian. The name of the company is Jackpot Digital. You can go to jackpotdigital.com and you can check that out. All right. News Radio 600 Kogo, San Diego Business Weekend. Thanks to Chris Janikis, Curtis Matovich, me, producer Lady Mary, and the rest of us. San Diego Business Weekend, News Radio 600 Kogo.